Good night, everyone. Yeah, welcome to Yard Forex. I'm going to go through our charts, do some basic analysis, and things that a trader should know. Please ask questions. And also, I'll really appreciate it if you click the like button so the YouTube, it can attract the YouTube algorithm so others may see this. Alright, so this is a Thursday event that I do every Thursday. But apparently I think this is gonna be my last Thursday for the rest of the summer until around the third week of August. Yeah, so let's go.
References from home interface. Systems are now fully operational.
Good night, Denville. I'm glad you're here. All right. Um, I'm gonna show something very interesting, right? And that's why whatever is happening in the summer, it's not it's as expected. It's as expected, and basically I took um on my channel last 2 weeks ago, and I'm gonna look at last week that what we look at. We look 2 weeks before. Um, we spend a little bit of time on euro dollar, and we're gonna look at um, dollar CAD that we had a look on last week, right? And in this period, as I said before, we expect lack of volatility. We've not seen any trend, and I go on my channel specifically just so I could share this. Well, what's happening? Sorry about that. What happened? Yeah, I don't know what happened just now. Yeah, this I want to show right here. And this, as I said, my YouTube channel, and this was Eurodollar on the 25th of June. And this is where we had that what I initially, that what I expected, and I'm gonna share it. It took us um, practically 2 weeks to get 200 pip to reach this high right here. Right, I'm gonna enlarge it. Right, come on. Right, so there at the low, price was right there. It wasn't there at the specific time, but nevertheless it went down and it didn't breach this low, right? And as a bull, right, I expect you're supposed to buy here and do your job and just step into the move up. But in other terms, it took us two weeks to get just 200 pips in a swing trade from swing low to swing high during this time of the year. Right, so that was what I want to just share with you, and I'm gonna take a look at dollar CAD, and I'm just gonna go through the same thing that we do last week, but also I want to get into the entry because and the next thing, thanks guys for the emails and stuff. I got a lot of emails asking about the entries, and many thumbs up that I'm doing a good job. Right, remember, please click the like button. Right, I'm gonna share some little techniques that I use on my entry, so you guys or my viewers can go and practice during this period to sharpen up your skills for for September when the volatility begins. And especially pay attention to this year. This year is a very tricky year. It's not, I wouldn't say tricky, it might be unusual, right? We have um, a pandemic, and also we are doing the second half of the year, or in the second half of the year, that we will be looking at the election, right? So we have a lot of risk events for the remainder of the year. So let's see how that play out, right? So, but nevertheless, 25th, and it took us 1 week, 2 week, 1 week, 2 week, 3 weeks from right here to get all the way to this recent high, because we are range bound, if you ask me. And bulls did their job by low, right, to get all the way to the extreme, and we have the 200 pips right there, right? So yeah, I'll go into dollar CAD to be specific. We were right here last week. We were right. No, sorry, let us use an epic pen to sharpen up on it. Alright, we were right here. I'm going to draw a circle. We were right here last week, Thursday, and I said bulls don't have anything to do until it come back down to this here that I've highlighted, right? And in fact, it went down. Bulls bought, right? Bulls buy, yes, but they didn't manage to hit the range area. They get trapped in the middle, because we have a lot going on in the middle, right? So then again, bears as their shot, they look left, right there, they say something going on in the middle, right? So bears took a shot right here, they didn't quite get it. The price was right, central pivot point, and bulls had it again. So it was like a tug and war. But as I said before, this is expected in this time of the year, so it might be a range bound for a little bit. Yeah. And how I look at range bound, right? I'm trading, it's gonna range forever until it break. Right? Until it break. I just trade it as a range bound. I don't trade it as a breakout. I don't trade it as a range. Sorry, I don't trade it as a trend. Right? I don't trade it as a trend as is. It's ranging, and I trade it as a range. When it's trending, I trade it as a trending market. That is the market condition. Right. So let's go into a little technique that I would like to share with you, so you can practice during the time when I'm absent, right? I'm going to use a different chart, because this is just basically ranging. What can I see? What can I see? Let's take a look at the yens. Yens is my favorite currency. Alright? Yens are my favorite currency. Yens are my favorite currency. Cool. I'm gonna go to Euro Yen, like how it is highlighted, right? And I have these areas identified. I'm going to increase the size. I'm going to go on 15 minutes first. I enter on the 15-minute time frame. I enter on the 15-minute time frame. Alright, but I analyze on my H4 and half the times daily. Alright, but I'm just going to show you a little bit of technique. Then we have the goal session we classify as Asia, ASIA, and the nude one right here we have London, right? Excuse the writing, and the green one right here, but the color changed because it mixed with the pink. Yeah, but you get the idea. New York. I'm just gonna write NY. That's a spell check. It's too long. Right. There we have it. So my style of trading, I like to trade at the extremes. I don't like to trade in the middle. Right? In the middle. I don't like to trade in the middle. Right? Because bulls don't buy in the middle, bears don't sell in the middle. I like to trade the extremes. Right? And the tactics that I use is the first 3 hour of the when the equity market are in a nutshell. Let us break it down. The first hour is the pre-market, right? Pre-market, and the second hour is the equity market. Alright, equity market, and the third hour is, I would say, the market. I just like to call it the market. I like to call it the market. So I would like to see how the pre-market setup, what the pre-market does, and I like to see what the equity market do when it open, right? Because these times is when volume tend to get in the market, volume, right? And as a trader, we need volume, we need volatility, right? So half the times when I open my charts, I come to my charts with the intention as who is in the money, which trader is in the money, if bull is in the money or bear is in the money. So I will just, for demonstration purpose, who is in the money, and also we need to know if it's a buy low day or it's a sell high day, right? So we have half the times we'll have 2 sessions. I'm just going to do it like this. We'll have it. Change the color, right? I'm just trying to make it as simple as possible. I'm just gonna I'll just get on a forward time frame. Might have it look a bit messy here. Alright, let's go on the 15 minutes. Let's squeeze it in. Alright. Much better. I think you guys can see that. And let's just erase this. Cool. Alright. This is 1 week. This is the following week. Right. What I tend to do is I highlight the week high, or the previous week high and the previous week low. So the market open up right here. Right here. I'm just gonna draw this right here. And this it went up all the way right here. Right? So this week open up right here. You see this? And the highest it went was right here. Right? This week open up right here, and come on. this week open up. So no, I think it's around right there. Right there. And the week ended up, the highest it went is right here. Cool. Right. So hold on just a minute. With that being said, I need to know, I'm just gonna draw a dollar sign. I'm gonna use green. I'm gonna draw each high and each low of the week. I try to draw where is the money, who in profit. Each time it make an extreme, I try to know who is in profit or where the stops are. The low of the week. I didn't draw this one right here. Sorry about that. Alright, let me just change it. Blue. And this is the extreme low of the week. Back to what I was doing. And I'm gonna drill this down into a daily for you guys, so you can get it. And I have money right there. Cool. So I tried on the previous week. You understand that. So this is the break. Let's change the color. Use pink. This is the break right here. Right? This is the break right here. And is this the extreme high? So I know that money is up here. Right? So I'm looking for a buy low. Right? I'm looking for a buy low so I can take it back up. Right? I don't want to buy high as a bull. Yes. Good night, Steve. I'm glad you're here. You make it. Right? So this is, I'm just showing you guys on a weekly template how I identify the week high and the week low and draw to figure out where is money, who is in profit, right? In a nutshell. So in this case, I understand that money up here and money down here. So what the market tend to, the market just drag you guys up, take it down fast for a continuation move because we buy low, right? This is in a buy scenario. So I look who is in money and the market open up right here, and whoever bought this market up and didn't take their money off the table or put their shot to break even, the market just came down aggressively, stop out all of who was buying right there, right, and then take the market back up. But what do we know? The market close the week right here. So it didn't go all the way up until the following week when it opened up right here. Right? When it opened up right here. So if you notice, I'm just gonna draw a dollar sign. Right? Who is in profit? Right? So now these bulls that bought up this in this market, they are in profit. Right? They are in profit. So it hit the high. So it hit the high. Alright, ST. So who sell this market and have their stop right above here. It's sell for the market to go down the bear. So what it do, just came, break out, right? Maybe it hit the stops, right? And then we would have the breakout pullback scenario. Right? I don't know if I don't want to confuse anyone. Maybe I'm trying to dumb it down. Right? Who is in profit? I think I'm going to label this title of this thing. Who is in profit? So, is for you to just understand the bigger picture or the structure of the market. The structure of the market. Right? It's the structure of the market. Want you guys maybe pay attention, because the structure is telling a story, right? And just zoom in this on a 50-minute time frame. So what does it do? We understand that money right here, because we sell it, right? Come down, it hit it again, didn't quite get there right here. It came up and hit it again. Then after it hit the bulls, hit the bears that who want to sell this market on the way down. Right? The market then target the next era, whoever is in profit, all the way down. So it take out this week, the beginning of the week where the week opens, so it's one day up, the next day down, right? So it's Monday, Tuesday, Wednesday, Thursday, Friday. So Thursday, Friday was the down day. So it's 3 days up and 2 days down. If you see the template, 3 days up, 2 days down. Right? So we have something right here in the big, so, alright. 2 days up, 3 days up, 2 days down. Right? And we have, in this scenario, we have 1 day up, next day sideways. So it's 1 day, 2 day, 3 day, 4 day, 5 day. Right? So it's 1 day up, 2 day up, 1 day up, 2 day up, and on the third day, which is the Wednesday, they take it back down and take out back whoever bought in Monday, in market open. Right? So this is just basic stuff. How the market just think as a bear and think as a bull. In a nutshell. Because if you want to buy, you want the bears to take it down low so you can buy it high. So you can buy it low. Right? So I just zoom in my chart and I just draw the swing high and the swing low. Right? And write who is in profit. And where I think their stop might be, or basic stuff like that. So this is just basic. So what we have in this week, we have the market open at, because this is Friday low. I'm going to write Friday low, right? Friday. This is the Friday low. Friday put in this peak formation in London session. London session did this, right? And New York carried up to this area and the market consolidated and it opened right here. So we have 1, 2, 3. This is 3 days aggressive up, right? This is the high of the day now, right? This is the 3 day up, right? Asia put it down. London retest back the low and take off, and New York finish the day right up in here, right? Right up in here. I'm gonna take out the pivot point. Just a minute. I'm gonna take off the pivot point. So moving average. I take off moving average too. Everything. Moving average. Don't know where I didn't do that. I'm gonna make the watermark stay. SMD. Yeah. I'm gonna make the watermark stay so we can see that it's 0 yen. Right? There we have it. Much better. Much more cleaner. Cool. Oh, this got this stay. Right. So there we have it. So we are in where was it? It was a Friday, put in the low. Right? Friday put in the low in London session. New York session carried back up. Remember now green is New York node. The node is London and the gold is Asia, right? So boom, went up, right? So it consolidated and the market opened Monday very hot, went up all the way up, but when it went up, the first target area should be this high, right? This high, which is Thursday's high, right? So what it do, it continue and make a new high, right? So we have 1 day up, 2 day up, and the beginning of Asia went up. So Asia print a high right here. Asia print the first high of the week, right? So we have 1 day. So then we have Thursday. 1, 2, 3. So we have Wednesday give us the pullback, right? Thursday carries up high, right? Thursday carry us up high, which is today, right? And Asia, now we are currently in Asia. So let's just identify some zone in the Friday. This is a swing low, and this is a swing low, right? And we have this right here. So for Friday now, that's what I'll tell you what I'm looking as a bear for Friday. Cause if I'm a bull, my trade would be done for the week based on my strategy, right? But a bear now is thinking something like if he watches double tap and get in right here at New York session right there, he's thinking this first. All right, let's just try this. He's thinking this right here, first target, and if he get through, if he break this area, right, he's thinking this back to this low right here, and this is just Friday's trade, minimum, right? So we can even draw our fibs. We can even go drill down, went down to our fibs now, right? Right, definitely. So we are thinking about the 3 to 50% retracement if you are a bull, right? So we are looking for this if you are fibbing it. So personally speaking, I'm not looking for a up move. I'm looking for the bears now to take the week down, just like similar what it did last week, but it didn't come all the way down. It come all it come all the way down, make a low last week, but I'm looking for, let's say, a 50% retracement, if then a continuation move up if it's going up, because the trend is up basically in a nutshell, right? So that's just a little technique that I look for, right? Which 2 days, if 2 days up, I'm looking for 3 days down, right? Or just things like that. But in each session, I look for specific patterns to enter, right? I look for specific patterns to enter my trades, right? And I use this 12-hour window. Half the times the market will try to use this 12-hour window to set up the move, or in this window, this is the move, right? This is the move in the window. So I'll just leave this right here, and I'll take a screenshot. Right, I'll take a screenshot, and I'll just have this, right, and I just look how the day unfold, right? But this is what I'm looking at, right? This is what I'm looking at for the ending of the day, because we are already in Friday. It's Asian printing up right there. Yeah. So I'm going to increase in size, right down a little bit, right? So you guys can see whatever take place. Definitely. So um yeah. I'm just gonna go on this right here. hmm Beautiful art. And also, I'm going to give away a next technique again that I use. This is a trending day, right? Technique that I use. I'm just going to share some things where you guys can use the time that I'm at around to just look into, just go through all the charts and look into it. And I'm going to give you the timing also. I'm just going to take the timing of the session, right? I'm going to give that so you guys can have that also, right? So I don't know. It depends on where you are in the world, because everybody times some time zone might be different, right? But probably you can Google it, and probably that can help. Just Google it. Where where um I mean, when does the equity market open in each time zone, right? But for me, I'm using New York Eastern Standard Time. So, but if you look on your charts, all right, on the chart we have time and we have price right here. Time and price, right? So, let's say, let's use this right here. So my time in the 3 hour window, it start 3.300, right? 300. And the first hour, when from 300 to 4 o'clock, that is the first hour. And 4 o'clock in my time, that is when the equity market open, right? That's when the equity market open, 4 o'clock my time, right here on the, where the time zone, right here at the low, is the 4 o'clock, right? But it might be 8 o'clock in the night, right? 8 o'clock in the night, right? But on the time piece right here, we have 4 o'clock, right? So I'm just going to share that, right? So you can look it up wherever your time zone is, and you can time that in, right? So that's how it how I really look at it. And in the London, what time the London now, it is 9 my time, and also apparently it coincides with this side, it's 9. It's 9 right here, but in my time it's 1 a.m. in the morning. 1 a.m. in the morning, so I have to get up 1 o'clock in the morning when everybody is asleep to be trading in the London session. And that's what I normally do. Wake up in the morning and trade from London to New York. The first few hours in New York, by 10, 11 o'clock, I'm normally done trading. I'm finished trading. So it's 9 straight through 12, right? In my time. Again, I'm just giving you in my time. That is New York Eastern Standard Time. And there you have it again. So in New York now we have 15 in the time chart, in the time right down here. 15, right? But it's 7 a.m. my time. 7 a.m. my time. So it's the pre-market. So this 3 hour go all the way to 18, right? And 18 is 10 o'clock my time. 10 o'clock, 10 a.m. in the morning. So by 11 o'clock I should be done, right? Or possible enter trade within that time span and leave it to play out. Right? So I'm just going to leave you this. And this indicator that I use is called I session, and you can customize it, right? And the reason why I have this, I just want to look in this section, what happened in this section, right? And you can also develop your technique, how you would enter based on price action. Based on price action, you will enter your charts, right? So there we have it. There we have it. So one other thing that I would like to, an next technique that I would like to share, and I don't see it in a textbook form right here, right? I don't see it in a textbook form right here, but I'm just going to do it right here in this scenario. All right, and I really still even don't see it right here. I'm trying to give you my number one. I'm a trend trader. I like to see. Probably have to identify a bigger time frame. Let's fast forward it a bit. The pre-market normally give you a counter trend move. The pre-market would give you a counter trend move. It fast. It happen fast. I don't see the textbook trade. I don't see the textbook trade that I'm looking for. I'm just gonna looking for something easy. Alright. I'm trying to looking for something easy. Probably I might have to use a different chart. End of day. Alright. I might have to use a different chart. Let's scroll back. I'm just trying to give you something to work with. Alright. Something, this is similar something right here. The first three candle at the pre-market normally give you. Alright, so one here, alright, definitely. Tell you I can find one. Alright. So I'm not about trading every move that the market set up, every candle or every move, knee-jerk reaction. No. I'm more like I develop like a laser-like focus. A laser-like focus to be specific on what I need to see before I enter a trade or things. I'll be specific. Right? I don't trade every candle that move, but I'm around when these equity market open to look for a certain setup. But it have slight variation. Every setup is not exactly the same, but you can look at it and you can say, yes, this look like similar that what we was talking about. Alright. The first hour, this is 1, 2, 3, 4. The first hour within the pre-market tend to go against the trend. Right? Like shop trader said this is a buy and we're going up, and it's normally clean. I like it when it's clean like this. Right? Clean like this. And it do right here. Right here we have it. We have 1, 2, 3, but this one is like a pin and it ends with a red. Right? So I'm just going to circle it as we go along. I'm just going to identify the area. And this is the eye. So normally it just go in one direction, right? Boom, and then they move down. And the pre-market do this. But this one in London session, this one is more cleaner. This one is very clean. So I see this in this area right here. Cool. So I would enter on this close of this red candle right here and pop my stop above, and I'm talking it the low of this. Cause I know that money is right here because bulls bought it right here. Bulls bought it, that's why it go up, right? And bears sell it, that's why it went down, right? So this extended move down, right? And see our next technique that I used to. when I say extended move down like this, right? And I say the market open with this big red candle right here, right? I would, if the second is the follow up candle is a green candle, bullish, I'll buy it and put my stop below, right? Because this is an extended move. This is an extended move, and we have 2 days down, Asia, London, right? So it's 2 sessions down and 1 session up, right? So this is the swing eye. So this is the money right here, Asian, the London eye. So whoever sell, see me, similar for this come down, we understand that profit is right here, money is right here. If you didn't take your profit right here, so it just went up quick and fast, and take out the London eye, right? So this is just like a textbook chart. So I like to see it clean. And you see how far I have to scroll to see a certain setup. I like to see a specific setup clean, and I like to take the easy ones, right? I don't like to take the ones that is difficult. You have to be guessing. You have to be guessing if it's gonna work, and no, I like to take the easy ones, right? So this is just my A plus setup that I use. Especially this one, I write A plus right here, A plus. Probably I write a different color because it. Sorry, A plus. I'm gonna write it beside it. Maybe up here. A plus. I like it when it's easy like that, right? I'm not trying to complicate stuff, right? Yeah. So I'm gonna leave it there, guys, until the 3rd week of August. Depends on the condition. I might do a next session, but I hope you just go through this session. I'm gonna give a title of the session so it might get other traders interested in this, what I do. And thanks again for the emails that I get and the comment, right? But please click the like button. The like button, it helps YouTube algorithm put this channel up front so other traders might get the value or find some value in what I share amongst traders. Alright? So thanks again.